In the equity quadrant, taking a look at the March S&P 500 futures, which coming into the close is still down about 1/3%, making it the weakest of the big three and the weakest of the US indexes if you include the Russell into that. The S&P futures started the day above the flat line but turned negative pretty early, producing the first negative day in the last four, including today. Certainly not worth looking at on a weekly basis given it's Monday, so we're only one day into the week. But the high today was 51.08, which made it up 13 basis points, just a little bit more than 0.1%. The low was 50.8075. So far, again, we're still open and it's still very weak, but that's down a little bit more than 0.4%. And as I already mentioned, we're coming into the end of the day down about 1/3%, so we're finishing closer to the lows than to the highs. Sector performance today, sectors heavily represented in the S&P 500 were among the weakest. The weakest sector was utilities, followed closely by communication services, but also healthcare, real estate, financials, and materials were all lower. Information technology and consumer discretionary were the only sectors firmly positive, with industrials slightly positive. But again, most of that is well represented in the S&P, explaining why it was the weakest index today. You also have to look at yields, which started the day sort of mixed, with the short end higher, but the long end unchanged. It ended with the entire curve being higher. The 2-year yield 4.74 up about 7, the 5-year 4.33 up about 5, 10-year 4.30 up about 4 basis points, and the 30-year 4.42 up about 5 basis points. And again, the market continues to take out those rate cut expectations, which earlier in the year, the market was expecting 7 rate cuts. If you looked at the CME Fed Watch Tool as the highest probability, right now we're at 4, and one of those rate cuts is only about 1% or 2% different from an unchanged rate level. So the market continues to take those rate cuts out, and that's not necessarily positive for equities. It certainly has not been, or just a glaring negative, as we continue to make new all-time highs. But the S&P today, weakest of the major US indexes.